Bitcoin should be $180,000 right now, and that's not fantasies. That's not a price target. This is purely a fair value based on global liquidity and where we are sitting right now. And yet here we are. Bitcoin is stuck around the 90k level, currently below 90k. Altcoins are in a terrible state. They're down 70, 80, even 99%. Ethereum is down 40%. Solana is down over 55%. 2025 was supposed to be bullish, was supposed to be the top of the cycle, was supposed to be the altcoin season. Instead, it became the year that nobody expected. Liquidity vanished very quickly. Markets crashed. Billions were wiped out in minutes. And the worst part, Bitcoin crashed and then it went sideways. That's what hurt people the most right now. And today I want to explain to you what exactly happened, why 2025 broke everyone psychologically, and why 2026 is very possible to flip everything upside down. If you understand liquidity, by the end of this video, you will never look at crypto the same way again. I can guarantee you that. So I hope you understand this. And by the way, just before we dive deeper into the analysis, just today, the Fed liquidity injections are starting $55.3 billion. Not next week, not soon, but exactly today. And yesterday, most people panicked when Bitcoin dropped to 88k. That's classic. They shake you out 24 hours before the money printer turns on. This is why most people never make life-changing money in crypto, because they panic without actually understanding and following what is happening in the crypto space. And if you want to be aware of the news, if you want to see when I'm buying, when I'm selling, and what, feel free to join Discord. All of this information is available there, together with market sentiment, technical analysis, educational content that can help you navigate and understand very well crypto. What is happening? Most people panic sell at the exact bottoms. Let's go back to 2025. What happened back then? People didn't lose faith because Bitcoin crashed. They lost faith because nothing made sense. Institutions were buying, ETFs were live, regulations were improving. We had Trump coming into his full power, who was pro-crypto. AI was exploding, and yet crypto went nowhere, especially the altcoins. It crashed. Why? Because people believed in a fake rule, and this is the 4-year cycle. People think that the 4-year cycle always works the way that it has been working until now. No, it doesn't. Markets don't move because of halving dates. They move because of economic forces. And the single most important force in all markets, that is liquidity. In 2025, what happened? Liquidity was being drained. The debt cycle got extended. Political incentives were pushed to 2026, and crypto, the furthest on the risk curve, it paid the price for all of this. And it wasn't a bad year, it was just a technical year, a year where a lot of changes happened and everything got pushed further away. And liquidity, that's the only thing that matters. And if we want to simplify this, liquidity is simply how much money is available to flow into assets. When liquidity rises, stocks go up, crypto explodes, risk appetite increases. When liquidity goes down, risk assets suffer, leverage gets wiped. Only cash survives. And here is the key insight. 90% of Bitcoin's price action is explained by global liquidity. And at the same time, there is correlation with Nasdaq. In 2025, Nasdaq tracked liquidity perfectly, but Bitcoin didn't. And this is the difference, or something that is not as per previous cycles. If Bitcoin had followed liquidity like Nasdaq did, today its value should be around $160,000. The gap is the liquidity discount. And as you know, discounts don't last forever. It is something that is happening or happened in 2025, but liquidity will catch up very soon in 2026. And then, after having all of this, what we saw on October the 10th was that broke everything. The day crypto broke was 10th of October. This is the day where altcoins dropped from 40 to 90% in minutes. Liquidations cascaded, exchanges froze, market makers stopped quoting. And this wasn't panic selling, no. This was market plumbing failure. And when we dive deeper into this, of course, it's just speculation, but what we saw happening is that market makers' APIs failed. Liquidity vanished instantly. Forced liquidation flooded the books. and someone or multiple entities absorbed massive inventory, and then that inventory had to be released slowly, daily, consistently. That's why we saw Bitcoin and all the altcoins fairly stepped down for months after 10th of October. We had the months of November, December, and now January. We see this moment of altcoins going down for months. Every rally failed. There was no recovery happening. It wasn't sentiment. It was mechanics, pure mechanics. Everything was calculated, staged, and planned. This is what we saw. This is not normal conditions in which we would see retail investors panicking and selling. No, this was something planned from probably multiple entities together. But again, we can have our speculation and we can be guessing on what we saw happening. Everything got destroyed at that time, and most people don't realize that Bitcoin didn't underperform. It behaved exactly as expected with the liquidity stress. And the risk curve under the liquidity stress is exactly following this. We see speculative altcoins dropping 80-90%. Meme coins are all of them down by 99%. We have high quality new projects, layer ones, down by 60-70%. We have Solana down more than 55%. We have Ethereum more than 40%. Bitcoin now has been flat for months. That's not weakness. This is Bitcoin doing its job. It's no longer the riskier asset. It's becoming the base layer of the risk curve, and that changes everything. But for those that are holding solid projects like Ethereum, Solana, and other projects, this is the real adoption story. Fundamentals, these are real projects. Ethereum, stable coins, their supply doubled. Layer 2s scaled massively. Banks are building quietly. Institutions are preparing. They are not speculating. Ethereum is not a trade. Ethereum is financial infrastructure. Solana is the most highly used project, high throughput, retail friendly, strong when liquidity returns. Layer 1s matter. Without base layers, nothing else can exist. But not every chain wins, not every altcoin wins, not every project wins. What matters is the metrics that I have explained in my course. Active users, of course consistent, not just random spikes, stable coin usage, value transferred, developer density and activity. We need the projects to be gaining attention over time and not just hype, not just something momentary. And of course keep watching flow of money, flow of capital, flow of users, flow of developers into the projects that you've chosen. Now, what is coming forward? 2025 is gone. What happened. I hope you're still around, still holding strong and having your strategy and plan for 2026. 2026, if we look at all the forward-looking indicators, they point at 2026 being bullish because we have fiscal stimulus coming, we have lower rates, we have banking regulations changing, we have credit expansion, liquidity re-entering the system. If we look politically, we are looking for a midterm to be won. Growth is non-negotiable for whichever party comes around. Economically, debt servicing requires easing, so liquidity cannot fall. The bond market can't break. For 2026 to be bearish, this means that global liquidity must fall, but there is no evidence for that. If liquidity rises, crypto doesn't just maybe goes up. No, it must go up, and it surely would go up because that's the main factor, the main driver for riskier assets to increase in value. So I would say zoom out, especially if your horizon is 2 to 5 years ahead and you're holding solid picks like Solana, Ethereum, XRP, Cardano, Polygon. I know a lot of members on my Discord are XRP, Avalanche, Cardano holders. They've been holding these projects for a long time. So if you're holding picks like this, I can guarantee you that you would get through crypto. You would make money. So just be patient, zoom out. The market stopped behaving like normal markets. And 2026 will reward positioning and patience. If liquidity flows, crypto follows. And we are likely to see Bitcoin closing the 160, 180k gap. Nobody will be asking why it went up. They'll be asking, people who left will be asking why we didn't stay in. Because even if you go back to Bitcoin over the years, you would see the same stories repeating. Some big event happened, everything crashed, everything thought that Bitcoin was dead, crypto was dead. And every time, all the projects, and Bitcoin in particular, bounced back up much harder. We can see, simply looking at the chart, you see drawdowns of 30%, 40%, 60%, and so on. So that's just part of the game. It's inevitable. Some years test you, they wipe leverage, they punish impatience, they expose weak conviction. I hope you are still around and 2025 didn't fail you, but you come back stronger and you have conviction in your plan, in what you're doing. So if this video helped you understand markets on a deeper level, and if you enjoyed the content, please don't forget to like, subscribe, and if you wish, you can join the community on YouTube or on Discord. Thank you so much for watching. I'll see you in the next video.